Hey everybody, this is Andrea Jenson from the Cash Flow CFO, and you're listening to the Cash Flow CFO Podcast, the show that explores the financial side of running a business for people who want to maximize profitability and scale with confidence. If you want to make smart financial decisions based on data and put more of your hard-earned profits into your pocket, this is the podcast for you. This episode of the Cash Flow CFO podcast is brought to you by the Cash Flow CFO. Did you know that on average, business owners have up to 84% of their personal net worth tied up in their business? Our virtual CPAs and CFOs, as well as accounting and bookkeeping experts, empower business owners just like you to make big leaps that help them maximize profitability and scale with confidence. Visit thecashflowcfo.com for more information, and thank you for listening. Hey, it's Andrea. I'm so glad you're here today. I wanted to talk to you about something that I am hearing with several other business owners. And I thought if they're having these issues and I'm hearing it in all my different business communities, then it might be something that you're experiencing as well. And I wanted to provide some actionable things that you can do in your business right now to be able to help you get through this rough spot. And that rough spot that I'm talking about is a slowdown in their accounts receivable. So we all know that AR is so very important to a business's liquidity. It's important to be able to meet the financial obligations of a business. And having a healthy AR is really going to keep a business self-sustained, relying on their own cash flow that's being generated from sales and delivery without having to go out to outside resources. And that's going to be really important because we want to save that for opportunities to provide a stronger return on investment in those activities versus using outside activity to prop up just our normal operations and activities. So I don't know if maybe you're experiencing this in your business, but it's really important to get ahead of it. So if you are looking at your receivables, your 30, 60, 90 days, hopefully you don't have any 90 days, but if you're looking at them and you're seeing that, hey, there is a slowdown in my business, then we want to make sure we're being proactive about it and putting in place some strategies, which are what I'm going to talk about today, so that you don't end up, trying to fix something so far down the road that it's causing major cash flow issues in your business and preventing you from, payroll, paying your vendors, and just different cash expenditures that we don't want you to get to where, it's getting really thin and you're having a tough time meeting those requirements. So, I think the first thing to realize and identify is if you're having these problems in your business, you're having an AR slowdown, you're not alone, right? This happens sometimes when, there's things in the economy, for example, that can affect this and influence this. And we know that having a slowdown in your AR is definitely going to affect payroll, affect vendor payments. And here's the kicker. This is what I want to make sure everybody is super clear and aware of, is that when you have a prolonged accounts receivable problem, it's going to catch up with you, and it's going to eventually, it could potentially damage your credit ratings and increase the cost of borrowing money down the road. So we want to make sure we don't get into any of those kind of tricky spots there, right? So there's other things. There's external reasons why we're seeing delays in AR that are a little bit outside of our control, but there's also internal reasons as well. And I'm going to talk a little bit about those and share with you some tips that you can use in your business to tighten things up when it comes to your accounts receivable. And some of those things that are internal and are in our control, we're talking about when delayed receivables go out, delayed invoicing, right? That maybe there's something that's holding up an invoice for work that's been completed, but it hasn't been sent to the client in a timely fashion. So it's adding extra days onto, before the clock starts for that receivable to actually be processed by the customer and payment remitted. It could also be poor follow-up, right? We don't have a system in place that systematically on certain, number of days after an invoice is sent out that it's being followed up on. And all of these items can really create a strain on the business and can really take what might have been, a small slowdown in AR and stretch it out and make it much worse. So that's what we're going to talk about today. It's important, though, that you get to the root cause of what the receivables delay is. So if you're looking at it and you're like, yep, we're doing all the things that we should be doing, and we're still experiencing, a delay in AR, then it could point to some outside factors that there's also ways you can work around that as well. And we're going to talk about that too in just a little bit. Start scaling with confidence today. The Cash Flow CFO is a full-service accounting and fractional CFO firm. So it goes without saying that our financial experts are phenomenal at number crunching. But more than that, they are expert communicators who will connect all those complicated financial dots in a way that just makes sense. We don't wait in the wings and check in every so often either. With our boutique approach, we position ourselves front and center, watching over every dollar that comes in and out of your business as if it was our own. So if your business is making money and you're ready to take it to the next level, but you're not sure you completely understand your numbers, and you're looking for that trusted guide to help you build a roadmap to reach your financial goals, it sounds like we would be a great fit. Visit thecashflowcfo.com and let's get started empowering you to build and scale your business the way you want to today. So let's look at what are some of the common causes of a slowdown in accounts receivable. We talked about the economic downturn. We talked about the internal inefficiencies. But it's important for you to really dig deep into understanding what are those root causes. And once you identify the root cause, then you'll know exactly what strategy you should implement to help alleviate the slowdown in AR. So the first step in understanding how to do that is to analyze what is happening with payments, right? You're going to see patterns over time, and it's going to help you to understand, is it specific customers? Is it a specific segment of the business that we're continually seeing the slowdown in accounts receivable on? And then you really want to get involved, get in and talk to the team that's doing the billing, talk to the team that's doing the collections. If it's two different people, it could be the same position. Talk to them and find out what are some of the issues that they're hearing when they're calling on these payments to understand. Is it customers' credit worthiness? Is it an internal process that needs to be adjusted? All of these things are going to be helpful in understanding what the root cause of the slowdown in receivables. So once you identify what that root cause is, the next thing you're going to want to do is to start to put some plans in place, some actionable items that you can help to start to make a plan to collect on those outstanding receivables. So the first thing that you're going to want to do is you're going to look through, pop into your QuickBooks account, and you're going to look and see, run an AR aging detail and look at the 30, 60, hopefully you don't have any 90 invoices that are outstanding, and you're going to prioritize them by looking at which ones are the highest value that are overdue, and you want to start collecting on those first, right? Because we want to bring in our biggest dollar amount the fastest, and then work your way down the list that way. So even if you're looking at a 30, 60, 90-day report, you want to, pop that into Excel, sort it by the dollar value on each of the invoices, and then start to collect on those first ones. And you'll also be able to see, reaching out to those customers, you want to understand what's the delay in payment. And it could be something that is really, they might be having a payment challenge on their end that you guys can come up with a mutual solution. Maybe you accept partial payments over a couple of days or a week so that they have time to get that payment into you. And really, when you're making those follow-up calls and reaching out to the clients that owe you, that owe on their invoices, make sure that communication is personal, right? Don't just have a canned email that you send out, at 30 days, 60 days, 90 days. You want to have a trigger within the company that signals it's time to send an email. But the more personal you can be in that outreach, the more you're going to get a response back from the other person. Because remember, we're all human beings, and there's usually a reason why somebody is late in paying their invoice. And so the more understanding and the more communicative you can be with them and your team can be, then the higher the odds are of getting that receivable in and getting paid. If they've got a list of people they're going to pay and you're the nicest one and you're being, accommodating and finding solutions with them, you're probably going to be at the top of their list for them to remit payments. So once you've done that process, then you've kind of done like the triage, if you will, of collecting on your receivables. The next thing that you're going to want to do is dig deep into those systems and processes and say, how can we prevent this from happening, again? And so you're going to look at what is our current invoicing process? What is the time from the completion of work to the time the invoice is sent out? And is there any efficiencies you can put in there to help lower the time between those two activities in your business? Because remember, the date that the invoice is created and sent is the date that the clock starts ticking on those terms that you've outlined on your invoice. But if there's an internal delay in getting that work to be invoiced and sent out to the client, then that's also, time that is lost and money that should be coming in, because you still have to pay payroll, you still have to pay any materials or supplies that went into delivering that. So you want to make sure that you're on top of that piece as well. And the next thing is we want to look at what is our internal process, the triggers that are going to notify our team to reach out at what intervals. So, for example, when your team first sends an invoice to a client, they should send a follow-up to say, hi, I wanted to confirm you received the invoice, and give some, identifying information, invoice number 111 for the amount of, $100,000. Please confirm receipt. So that okay, yeah, it didn't get lost in the shuffle. It didn't go into someone's spam. It didn't, accidentally get deleted. And so that should be the first check that your team does, is confirm receipt of the invoice. And then from there, you can, have a different task management software that you can trigger different dates on. So once your team completes that task, it should automatically say, okay, in the next however long the terms are that you've given on the invoice, you're going to follow up again if you haven't received payment. And so having these different touch points at the different date intervals is going to be the proactive way that we're staying on top of receivables. And it's going to help reduce the amount of days that those receivables are outstanding. So those are some of the immediate things that you can do to help with those. There's also some longer term strategies that I wanted to talk to you about. Now, if you don't already have this, there's some technology platforms out there that can help you to automate this and make it faster. So some of them that, QuickBooks is a great place to start. And it's going to streamline the invoicing and help to follow up as well. And it's also going to help to reduce manual errors. And this is a really big one, because that's also a really important thing to identify. if your team is doing that confirmation check-in to make sure that the client received the invoice, they can also be saying, we also want to make sure that there's accuracy and you're clear on the terms, and just kind of friendly, casually discuss what's on that invoice with them to make sure that, nothing pops out of like, oh, wait, that's not what we agreed upon. Instead of it sitting for a week or two on somebody's desk and then them coming back to you and saying, hey, wait, we need to talk about the term or the amount or the billing cadence or things like that. The other thing that is really helpful to do is to improve your relationship with each of your customers. So we want to make sure, number one, we're putting out terms to clients who have the credit worthiness to extend terms to. And this is really important. And a lot of small businesses don't take the time to do this until they have a situation that kind of bites them in the butt. And then they go, I should probably put something in place. But it can be a very simple or very robust, depending on, the amount of money that you're extending credit to your clients on. And so you want to make sure you're looking at payment history. You want to make sure that you're looking at current market conditions based off their industry, and kind of just doing doing your due diligence as a business to make sure that you're extending credit to someone that you don't have any right to extend to in the beginning, or you shouldn't be extending to in the beginning. The other thing, I just can't say it enough, right, is open lines of communication. When you have a client who's late on payment, reach out. Don't be grumpy. Don't be mean about it. Just understand that, hey, we're all in this together. How can I help you get through this? That's going to create a tremendous amount of trust and transparency in your working relationship with them. And it's really, going to pay off in dividends throughout the amount of time that you guys have that relationship of provider of services and payer of the bill. So some of the other things that you'll want to make sure is you're strengthening your contract terms and your payment terms. So you want to make sure you're very, very, very clear on the terms that you're extending to the clients. So you want to clearly outline, is it, net 10, net 20, net 30? Is there a discount if they pay early, or is there a extra charge you're putting on there if they use a credit card, for example, versus an ACH, or send you in a paper check if you still take those? Identify what the penalties are if there is a late payment. Are you adding on a percentage of the invoice amount after so many days? Does that change after so many additional days? And really just be clear on your terms, and make sure that the client understands that before you start to do work for them. Right, that's important. And then over time, you want to revisit your customers, and you want to look at any trends that you're identifying. Maybe you have a handful of customers that they're always late on paying their bills, and maybe you want to change them from extending credit to due on receipt, or you put a credit card on file and they agree that once the services are complete and they've signed off on them, or delivery of the product, whatever it may be, that you're able to run that payment so that they don't have the opportunity to delay or be extend out that payable for them. The other thing is you want to take a look at balancing market conditions, right? What's going on in the market right now, and how is that affecting my clients, right? The industry that you serve, or if it's a wide variety, you'll want to look at each one individually and just make sure you're being proactive to see if there's anything that you're seeing that you should say, hey, this industry specifically is, having a crisis. I don't want to extend terms to that. Or you have a conversation up front with your customers and say, hey, we know that you're going through this. Let's come up with a solution, so that, it's not a reactive solution, it's a proactive solution. And your clients will really thank you for that. And ultimately, that's going to strengthen the bond that you have with them. So, to kind of sum that up, right, we're looking at the behaviors, the payment behaviors of each of your clients.
So I think, we've gone through quite a bit of things you can do for helping to alleviate the pain of a slowdown in your accounts receivable. And I think to really, sum it up, the number one thing is be proactive, reach out, don't be shy. Don't be, hide behind an email or keep sending a statement to your clients. There's usually, in my experience, there's usually a reason why your clients haven't paid a bill. And maybe there's an error on the invoice and they are just so busy they haven't had a chance to reach out to you. Maybe they are switching banks and they haven't gotten their new account set up. Who knows? We've seen it all in our, supporting so many different businesses with their receivables and their invoicing and billing. That, there's usually, I'd say 90% of the time, it's not people just being deceitful, they're delaying on their payment. There's a reason why. So reach out, find out the reason why, see if you can find a solution that is, good for you and good for them. When we talk to our clients and we talk about, every dollar that they sell in revenue has a certain allocation. You want to at least make sure you're collecting those costs, of goods sold, right? The amount that you're paying out as a business to deliver what it is that you've sold, at least get that covered right away and then make up a plan for them to pay the remaining balance on the invoice. That's going to help when you have payroll coming up due. That's going to help when you have bills that need to get paid. And it will help to, not have to dip into a line of credit or savings or things like that. So hopefully this was helpful for you. Send me an email if you're experiencing these problems or you want to talk about some specific solutions you can implement into your business. I'm always available to chat with you, Andrea at the Cash Flow CFO. And I always love talking about these things and sharing, with business owners. Here's some SOP templates that we use with our team when we're supporting our clients. Happy to share those with you as well so that you can get out of a sticky situation if you've got a slowdown in your AR. So thanks so much for being with me today. Hope you got some great nuggets out of this. And as always, reach out with any questions and I'd love to chat with you.
Thank you for listening. Don't forget to like and review, and we'll catch you on the next episode. If you're looking for more content or resources in the meantime, check out our website for information, blogs, and our I've Got a Spreadsheet for That series. That's thecashflowcfo.com. Again, thecashflowcfo.com. We can't wait to hear from you.